Who knows? Maybe we'll pay off our $35 trillion, hand them a little crypto check, right? We'll hand them a little Bitcoin and wipe out our $35 trillion.
But how do you...
And, I'm still bullish on Bitcoin. In the fourth quarter, seasonally, Bitcoin strong, but now we have the Fed flipping dovish after being essentially hawkish all year. That's a tailwind for Bitcoin. So I think Bitcoin gets to 200 to 250,000 by the end of the year. And that aligns with Mark Newton's technical targets.
But at least we finally have something that can make the Federal Reserve itchy to cut interest rates sooner rather than later. Bank loans gone bad. Nothing motivates the Fed to move faster than credit losses because they're a definitive sign that the economy is going south. There are early warnings that it's time to ease, and the banking system has now provided us with enough questionable credits in 1 week that the Fed can move swiftly to slash rates without all that much worry about inflation. Of course, when you have something as grave as credit losses at banks, the market doesn't react well. It's a sign that until the Fed eases, perhaps aggressively, banks will make it harder to borrow money and layoffs could be on the horizon, which is ultimately why the Dow tumbled 301 points today, S&P dropped 0.63%, NASDAQ sank 0.47%, even though it was up in early morning. Still, though, the Fed's in a constant tug of war between cutting rates to spur economic growth and leaving rates alone to prevent a resurgence of inflation. With the regional banks getting crushed by bad loans, it's much, much easier for the Fed to go with the former analysis.
Don't miss a second of
the day that they're going to end the runoff or at least stop it for a while in the coming months. What do you think?
I think a little bit too early, but I understand why.
Why do you think that?
Because I do think you got to get back to an equilibrium level of the balance sheet. The balance sheet is still too big. But they have to. But I understand why. It's because they're worried about the labor side of the economy.
Well, do you think the economy's in a good place? I mean, you chair a corporate board that has Under Armour that has a direct line into what the consumer is doing.
So on the surface, the economy is great. We had 3.8% growth in the second quarter, highest in 2 years. We're going to get over 3%. Inflation is contained. The Fed is easing. The stock market is booming, but gold is at record level, but the dollar is languishing.
You think that gold at record levels is more concerning than not?
Yes, it's a risk-off asset that has broken its correlations for good reason because of what's happening to the view of sovereign U.S.
So you think it is a debasement trade, so to speak, that's leading to gold?
Yeah, look at the amount of inflows into our stock market from outside that are hedged, dollar hedged. So people love U.S. companies. They don't like the dollar. So they're hedging that. I think the other issue you've got to be concerned about is the decoupling. Low-income households from middle and upper-income households, that's a decoupling. The labor market from growth, that's a decoupling. So below the surface, there's a lot of question marks that suggest that we've got to be careful in the months ahead.
Specifying any details from the past, the leg of the mandate that is further away from our objective is the one we will focus on. So inflation is close to 3%. These indicators, both from the New York Fed and what you're reading here, aren't showing very encouraging signs that we're going to be trending back to the 2% inflation target. And in the economy, the unemployment rate is 1/10 of a point above what the Fed thinks is full employment. So this whole idea that the balance of risks has switched to the labor market, the argument to me is very contorted. And the Fed, these surveys are good, but to be honest, we kind of ignored them when we had real data. So they haven't gotten any better. It's not like they say in the land of the blind, the one-eyed man is king. This is the case of the one-eyed man with cataracts is king. It really doesn't track very well.
I want to emphasize what John is saying. You had Bowman the other day saying we're headed back to 2%. You've had Myron saying there is no inflation from tariffs. It's a bit of kind of wishful thinking out there.
It's very wishful thinking. We have to think back. Back in 2021, when the Fed was maybe more of a coherent entity, they went through the whole inflation is transitory routine, which turned out simply not to be true. So we're in a situation where we seem to be headed headlong. Market surprised, and last time I looked, 98% chance of a rate cut on October 29th, headlong into easing policy while inflation is headed in the wrong direction. The Fed tells us inflation expectations are anchored, but the University of Michigan survey, another indicator that we get, it says the 5-year expected inflation rate's 3.7%, which is nearly double the Fed's official target. So I do not get why the focus, well, I mean, I kind of do, but we probably won't talk about that, why the focus is on cutting rates to address labor market weakness, which, by the way, is what the Fed did for 100 basis points between September and December of last year. They took out insurance at that time for potential weakening in the labor market.
And we have gold's market cap getting up to almost that $37 trillion in debt that we have. So, guys, we're clearly moving over to a new Bretton Woods. And remember, the crypto teacher told you. Let's get into the video. Welcome to the Crypto Teacher.
Don't forget to like and subscribe to the channel.
And you know I come back with that video just to make you think. And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And we have Tom Lee saying that Bitcoin is going to hit 250,000 by the end of the year because the Fed is going to be dovish. But remember, the only catalyst we have are those altcoin spot ETFs because the Fed is not printing more money. We can clearly see liquidity is starting to shrink. And we having cracks in the economy. And yes, we heard that from Jim Cramer. This gives the Fed the reason to cut. And we already know that the small and medium-sized banks are in trouble right along with the small and medium-sized businesses. But now all of a sudden, the mainstream media is trying to point out the cracks in the economy. We have yield rates dropping, but we know that's coming from the Treasury and the Fed manipulating that long end because no one wants that long-term paper. And these small and medium-sized banks have to refinance the debt, and we know they're going to be in trouble. And don't forget, the United States has to refinance $9.5 trillion by the end of the year. And then next year, another $9 trillion. Which is not talked about whatsoever. And that's the reason why we keep getting drama. And we're going to have plenty of drama over these next 2 years. And the Fed cutting 25 basis points is not going to help the labor market. We know they kept rates high for longer in order to destroy this legacy economy. They printed 80% of all money in existence in 2 years. And then we had them bring up Milton Friedman. And he told us the money printing is always going to cause inflation. But what's going to cause a deflation? That's right, AI. These robots, algorithms, and drones, because they're going to raise productivity, and the people are going to be sitting at home getting free money. And we have Alibaba says their search engine, you actually can talk to it like a customer service agent, and they'll make sure they get you the product. Guys, you wait till they turn on these supercomputers and they have all this data. Like I always tell you, they're going to be able to know you better than you know yourself. And we have Trump again trying to bring peace. And guys, we know this is definitely biblical. Going to be meeting with Putin. And like I told you guys, we're going to have plenty of entertainment over these next 3 Fridays. But don't forget the mission is the 4th Industrial Revolution, and also we got to refinance $18 trillion. Yes, you heard that correct. $18 trillion over the next 2 years. $9 trillion this year, $9 trillion next year. And that's the reason why these stable coins, blockchain, and digital currencies and these machines are so important because the legacy market is over. It's the rise of the 4th Industrial Revolution. And remember, this is a plan that moves in phases. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Idea that there is not a root for inflation to create, for the job market to create the inflation from the tariffs that would
But we
be
know
broader.
the Phillips curve doesn't work. Inflation is not a labor market phenomenon. Inflation is a monetary phenomenon. And that was something that Milton Friedman made clear back in his 1968 American Economic Association address. And Joe, to your point on the labor market, yes, hiring is moribund and firing is very low. But we're seeing studies come out that say one of the things that's holding down hiring is AI, and it's substituting for those entry-level jobs. It's not a shortage of demand. So what do interest rate cuts do? They lower the cost of capital and increase the incentive to invest.
But could AI be deflationary, the biggest deflationary force we've ever seen?
After it's inflationary.
A rework of our search and recommendation this year, starting with our 2 billion product listings, right? Because we have really one of the biggest product category in the world, which is 2 billion strong. And we actually used AI and large language model to rework that underlying product catalog. We enriched the product content. We also re-indexed the entire product catalog, which is a foundation for the search engine. And you can ask our search engine, what is the best gift for someone who's really stressed out in high school and he's having headaches, for example, right? And the AI will be able to comprehend your semantic query and to analyze your underlying need and give you a recommendation of the right products. So this was not possible in a simplistic search engine where you have to tell the search a product name and it's going to give you that particular product.
You posted about your call with President Putin today, and you spoke about meeting in Hungary with him. Do you have a timeline or a date set for when?
I would say within 2 weeks or so, pretty quick. Marco Rubio is going to be meeting with his counterpart, as you know, Lavrov, and they'll be meeting pretty soon. They're going to set up a time and a place very shortly. Maybe it's already set up. They've already spoken. And I thought it was a very good phone call. I thought very productive. But I'll be meeting with President Putin, and we'll make a determination. Tomorrow I'm meeting with President Zelensky, and I'll be telling them about the call. I mean, we have a problem. They don't get along too well, those two, and it's sometimes tough to have meetings, so we may do something where we're separate but equal. We'll meet and talk parties, but this is a terrible relationship the two of them have, and it's one of those things. I've seen things that nobody would believe, but this is one of them. So we're going to be meeting in Hungary. Viktor Orban is going to be hosting, and it's really something that's time. Last week, over 7,000 people were killed. That's ridiculous. And you know, it doesn't affect our country. We're not losing people. We're not losing Bobby. We're not losing Americans, but they're losing Russians, Ukrainians, mostly soldiers, for the most part, soldiers. And we hope we're going to get it stopped. I thought this would be, because of my relationship with President Putin, I thought this would be very quick. And it's turned out to be, who would think I did Middle East before I did this? We did a total of 8 now, 7 and now 8. And we're going to make this number 9.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leverage to technology, and I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust. and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're going to get more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the new World Order book, plus the 3 kids books, It's Time to Re-Educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam. Save the Village, Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.